Sameer, good morning. Thank you for joining us. What do you want to start with, Yes Bank or Telecom?
Morning, Nikunj. I think both are to an extent interconnected because one is talking about a specific bank and the other is talking about banking as a system. Because I think if you look at what is happening in the telecom, there was a Supreme Court ruling post which the entire thing came onto the forefront as to becoming a systemic kind of a risk. Then the government got in and said, okay, we are looking at giving moratorium. And at the end of the day, finally now the companies, the players themselves have decided that somewhere the game has to move from market share accretion to profitability in terms of operation. So therefore, you can't have a freebie being doled out, continuity. So that's the reason why now when the pricing table shifts, yes, given the fact that India has got a fairly high penetration of roughly 80-85%, I think there might be some shakeout, but not large, because by and large the market shares have now got aligned. And the fact that today data has become such an important sort of fix that everybody sort of first renews their data plan before going and buying the monthly groceries. So to that extent we are back to where probably the Western world also is, that data is now as much an essential purchase rather than a discretionary spend. So therefore at 10 GB per month kind of a consumption, maybe that can sort of plateau out a bit, but I don't think that the fear of a lot of subscribers going off the network, that may be slightly premature, because I don't think people will first of all, the increase is not likely to be too large in terms of hitting the purses, and even at that modest increase people are likely to stay put because now it has become a sort of way of life. So I think telecom, it clearly signals that the regulator, government and the players are taking the right steps to ensure long-term viability of the sector, which is good for the banking system and which is good for both the players as well as the consumers in the long run. And talking of Yes Bank, I think the first thing is that this is actually a backward facing data because it is for ending March 19. So now the new management has taken charge post that. So I think they've already taken steps in terms of guiding the market that yes, there is a watch list which has got increased. They have made contingencies. Now out of that, one can say that this has got realized. Now to that extent, one has to wait and watch as to what is the treatment given to the balance number in that bucket. So I think people will give it time because it's not as if it's something new, but yes, it clearly shows that we are still to a lot of things to take care before you clearly turn the bend.
So would you be a buyer in Yes Bank if today the stock falls, which in all eventuality it would?
Aisha, I think for a long-term investor, anything around 60-65 levels is not a bad price because the visibility as to when does the investor come in and what price he comes in, that is something that is not a question of if, it is a question of when. And once that happens, you're clearly seeing a bank of this size will definitely turn. And given the fact the kind of people who come and do the second round of fundraising and the fact that the management is committed, I think there is clearly, over the long run, there's clearly value in the stock at these prices.
Sameer, would you be a buyer in any of the telecom stocks? And if so, would it be Bharti or would it be maybe Reliance?
Well, Aisha, I think as a sector, there is definitely good tidings because now at least the hole has sort of been filled because now you're no longer going to see price wars.
I know, you've already explained that rationale, but I just want to know whether you'll be a buyer or not.
I think from this, I would rather go for, if I'm looking for a multi-bagger opportunity, a Vodafone-Idea probably looks better because, there, in case the rate of change, if it happens, you could probably have a lot of, value accretion that could go because at 16,000 crores of market cap, the problem is actually the net debt of about 1 lakh crores. And in case you talk of, increasing the tariffs and the EBITDA will probably grow by almost 70%. So the rate of change is not perhaps getting priced in. The stock has only doubled. So if the EBITDA grows 2x, the stock should technically go 4-5.
Well, the other interesting bit in the market really has been how some of the power utilities, or I would say PSU utility stocks have made a comeback. So REC is doing okay, NTPC is doing okay, Power Grid is also having its good time in the sun, so to speak. Then you got AU Financial Banks, which has done rather well right now. What is looking slightly toppy? Good old autos. The seasonal flush, which we thought will come in largely because of festival season demand, that seasonal flush clearly is behind, and that in a sense is looking slightly toppy. Within the NBFC space, I have to grant it to Bajaj Finance, but also Chola Finance, Sundaram Finance. there may be a rout in NBFC space, but a Bajaj Finance, a Chola Finance, a Sundaram Finance, these stocks are sitting at an all-time high. Sameer, where is something like a Chola or a Sundaram headed?
Well, Nikunj, I think if you roll back a year, what has happened is that the NBFC crisis first took center stage about same time last year. So now what has happened is that because the other guys have actually vacated the space, it is these large companies that have gained market share. And they have also, because by virtue of their balance sheet strength, their cost of fund has actually got better. So today they are actually in a sweet spot whereby they have gained market share, cost of fund has improved, hence the spreads look better, and hence you are actually finding that their earnings delivery is far better than what market had expected. Now if you roll forward another quarter, I think the base effect will likely catch up. As a sector, you're likely to see that there will be some amount of growth that should be visible when we look at a December or a March quarter earnings. Purely because of our base effect. Now the government has also started putting in a lot of money in the system, so hopefully the velocity will pick up over the next couple of quarters, and the fact that after the harvest actually hits the market of Kharif somewhere in Jan-Feb, there will be some sort of a consumer spending that should kickstart. So actually it shows that you could be in a situation whereby from here the return ratios could actually improve for the large guys. Now for the weaker portion, you are already seeing that yes, there is that article 227 about the regulator taking it to NCLT. There's also a function that 500 crores and plus AUM can be referred. So the resolution process is also now beginning to take shape. Now I think these are confidence boosters, but having said that, the valuation still just doesn't give you some sort of comfort for fresh entry. So people who are holding will continue to hold because the earnings is good and the outlook is not all that bad. But will I make a fresh purchase here? I don't know. So therefore, whatever incremental flows are coming in, people are wanting to remain invested in these pockets because right now they give you sustainable and predictable growth. That's where I think the argument is.
There is news on Britannia this morning talking about how they're still waiting 9 to 12 months or expecting the revival only in 9 to 12 months, contrary to what we're seeing on the index. But they're still saying it's going to take time, so the pain continues to be there. What are you making of the latest comments?
Well, our markets always move ahead of the actual earnings. So therefore, I think this is some sort of a confirmation that yes, the earnings should turn the bend from here. Now, how much, and is it 11%, is it 15%? That one doesn't know. So I think the challenge is the September quarter earnings, there are two clear trends. First is that if you knock off the tax impact of the lower corporate tax cut, there is actually not much of earnings have actually performed below expectation. And on the revenue line, there's actually a far bigger disappointment than what was earlier envisaged, given the fact that the expectations were low anyway. So I think these are two very clear indicators that yes, the worst perhaps hopefully should be behind us, but the way forward is there is large hope that from here, in case the liquidity in the system starts to show its impact, you should see some revival down the line. Now, whether it is 1 quarter, 2 quarters, 3 quarters, there the verdict is still out. That is actually a function of, because today the very clear signal of consumption demand coming back, that is not visible. There is just no credit offtake. Those are factors which are still, to be grappled with in terms of where the market is headed relative to valuations.
Okay. The other piece of news this morning is the fact that car sales have actually managed to surge about 11% in the month of October. So it seems that festive cheer rubbed off slight bit and you did see that uptick come by. Now what one needs to really gauge is how much of the inventory with most of these passenger car or for that matter CV makers as well got cleared in this 11% uptick coming in. But Sameer, suffice to say that the big pain for Motown is behind us, and at least that is what the stock prices also seem to be reflecting.
Well, Aisha, as of now, the stock prices have reacted and the numbers have still not shown. So therefore, it will be a difficult case to say whether, who's, what has actually played out. Because if you look at, our leading two-wheeler manufacturer, he was very buoyant about the festival season. But, last week itself, he's come and said that, November is not all that good. So, there is also a function that last year Diwali was in November, whereas here, this time we had it in October. So adjusting for the base, I think the inventory has definitely, it is coming down. But is it at a level at which, at the first sign of a revival in demand, will you restart and restock adequately so as to give you that fillip in the revenue line? One doesn't know. Because I think if you look at the 2008-9 example of how you had a very clear and a very rapid U-turn, at that time the inventories in the system had got completely clean. So at the first sign of any change in demand, everybody just ran to restock inventory. I don't know this time. I think it is different for different players in the motown. In passenger cars, perhaps it is not all that great, whereas in two-wheelers, maybe it has got cleaned out quite a bit. So I think that's where the market has to make a decision as to where the level of demand will first start coming in, because I think we had the data of new registrations coming in for the month of October. Passenger vehicles has already shown the base effect. They've already started showing I think 1 or 2% growth YOY. But the CVs and the two-wheelers are still in fairly decent negative territory.
Okay, just 3 minutes left to go before we kickstart trade for this Wednesday morning. Sameer, just very quickly on the divestment buzz, it seems that the cabinet meeting is today. But again, these stocks have already run up in anticipation of something coming in by. So be it a Concor, be it a BEL, or for that matter, BPCL. Still, you would say an opportunity to buy into these names?
Well, Aisha, if the divestment process getting cleared by the cabinet and actually the firm getting divested and the money coming in so as to impact the fiscal revenues, etc., all that, there's at least a fair bit of time. So I don't think there should be any fundamental reason for the stocks to go up further from here just on account of the cabinet clearance, because then the process will start getting kick-started, because since the time these names are put in the public domain, the stocks have already reacted. So I think from here onwards, it's just a confirmation that yes, the intent is clear. And the larger thing is that when FMS said that they don't intend shifting the fiscal target for this financial year, which means that hopefully they have a plan so as to ensure that some amount of stake sale or monetization happens. So I think one would need to see as to how is the execution of that intent rather than just the fact that the cabinet has cleared the proposals.